Hi, welcome to today's video. The Federal Reserve has recently signaled that due to the muted inflation growth, it will like to wait and see how the economy evolves before raising the target rate. It has also signaled that it will let the inflation rate grow higher than the objective rate of 2% before raising the target rate. With weaker outlook in the economic growth and inflation near target level, another rate hike is less likely in this economic cycle. The risk of a recession in the US economy has been high due to many companies have high corporate debt and corporate earnings that are just enough to cover the cost of debt. Now that the Fed has signaled an unchanged target rate, the cost of debt will be less than previously expected, and the probability of a recession has lessened. Economic indicators from the Eurozone have shown that the declining economic growth has persisted since autumn 2018, longer than what the market has expected. A rate hike from the ECB will also be less likely in the next 2 years. And that's it for today's video. Check the video description for more details. Thank you for watching.